e.l.f. Beauty is about to report earnings, but why would I care? Now, e.l.f. is on my watch list because when we look at the year-to-date, 1-year, and 5-year chart, we see a massive outperformer. On a 5-year basis, it is the 13th best performing stock at the end of July. If we look at the valuation metrics, we see a forward PE of 46, a free cash flow yield of 0.67%, and when adjusted for stock-based compensation, as low as 0.24%. Now, e.l.f. Beauty has seen some incredible growth. And with the earnings coming up, let's look at some of the prior growth that we have seen, what we are expected to see now, and what needs to happen in order to justify these valuations. Now, if we start by looking at how this company performed in fiscal year 2024, which ended on May 31st of this year, then we see that they grew net sales by 77%. They increased their gross margins by 330 basis points. They grew adjusted EBITDA by 101%, and they gained 305 basis points in market share. Now, summarizing a company with these metrics, that's very impressive. And thinking about a cosmetics company is maybe not the first thing that you would suspect when you see these numbers. And what makes it even more impressive is when we look at how the company has grown over the quarters. Because when we do so, we see 21 consecutive quarters of net sales growth. And these numbers are just simply accelerating. They keep going up more and more and more. Last year, they were consistent over 70%. Even better yet, the past 5 quarters were over 70% year-over-year growth with, well, Q3 2024 being even at 84% growth. So, simply said, e.l.f. Cosmetics is just growing their revenues at an incredible pace. There is nothing else to say about it. And when we look at the year-over-year consumption growth of, well, of the skincare category, this is one of the categories e.l.f. operates in, we see that the skincare category grows at about 2% year-over-year, or grew at about 2% year-over-year. And e.l.f. Beauty grew by 38% year-over-year. This is 19 times the industry growth standard. So e.l.f. is just, or e.l.f. Skin is just growing way faster than the industry. And this is seen across basically all segments of the company. Now, if we look into e.l.f. Skin slightly deeper, we can see that it's the number 11 brand in the industry. And they grew their market share by about 45 basis points. So they are growing it quite steadily. And there is still a lot of upside to gain, because if we look at the momentum, it's not like they are losing market share. They are gaining it aggressively. Now, when we look at the international sales growth, we can also see that they grew this metric by 115% year-over-year. So this is in Q4, and, well, 115% increase of sales internationally. That's very impressive. And if we look at how they did so, this is what they explained in the earnings call as well. When they went to Italy, into Douglas, basically there were lines outside the stores for when e.l.f. would get in. This is because of very effective and successful marketing. When e.l.f. Beauty went to the Netherlands, they launched with Ethos, one of the more pharmaceutical-like stores in the Netherlands. Also here, they saw immense demand for their products. This is just when they are launching. They aren't even there yet, and people are lining up for their products already. This is how, of course, you get to 115% international sales growth. But another way of doing so is by pricing. Because if we look here, we can see that the various products or categories that e.l.f. is in, they are vastly undercutting the prices of the prestige products, or the average prestige price. And this is what we see coming back in their unit volume growth. Because basically we see Maybelline going down 7%, we see L'Oreal going down 7%, CoverGirl down 6%, Revlon down 9%. And then there's e.l.f. basically sucking up all what others are losing and more. They have 33% unit volume growth. So, yeah, I don't know what to say, but that's just simply amazing growth. Now, if we look at that market share, because for e.l.f. Skin, I already alluded to it that they grew market share by 45 basis points in fiscal year 2024. But if we compare it to fiscal year 2019, we saw that they had a 0.5% market share and now a 1.6% market share. Or they tripled their market share in just 5 years. And this is all taken from competitors. And that means they are vastly outgrowing competitors. Something that we want to see because that momentum is just, well, if they can sustain it, they are the number 11 brand right now. They still have some ways to go. Now, how likely is that momentum to be sustained? Well, quite likely, I would say. Because if we look, we see that e.l.f. Beauty is the number two most purchased cosmetic brand for millennials or people aged 30 to 39, and the number one most purchased for Gen Alpha, age 6 to 11. Now, buying cosmetics when you're just 6 years old might be a bit early, in my opinion. However, that isn't the point here. They are clearly buying it, and e.l.f. is the number one brand. Now, if those people are happy with e.l.f., then why change it? Because those more expensive brands, like Estee Lauder, for example, they are just so much more expensive. That's not even funny. So, if you are happy with your e.l.f. cosmetics, then why change it up? As long as e.l.f. isn't increasing their prices enormously, but I mean, they shouldn't because their prices is one of their strong points. They say it themselves. Now, like I already said, part of how e.l.f. is growing as fast as they do is by their marketing. And we see that they are investing a lot of their money into it. In 2019, fiscal year 2019, it was about 7% of net sales. 2020, 13%, and that's now even up to 25% of net sales gets invested into marketing. But as long as our marketing is efficient, then why not? I mean, we can clearly see how much market share they are gaining, how much growth they are having. So why not invest it? Now, when we look at the goals and then the guidance of e.l.f. Beauty, we can see that the international penetration is something that e.l.f. still has a lot of room to grow in. Because e.l.f. Beauty has about 15% of their net sales coming from international markets, while the industry standard is 70%. I already explained to you how efficiently e.l.f. Beauty went into Italy, how efficiently they went into the Netherlands, and this will only happen in more countries as, well, the brand awareness keeps growing. And if we look at the fiscal 2025 outlook, we see that they are guiding for an average shares outstanding of 59 million, net sales of 20 to 22% growth. We see adjusted EBITDA of 285 million to 289 million. We see adjusted net income of 187 million to 191 million. We see adjusted EPS of $3.20 to $3.25 and an adjusted tax rate of 20 to 21%. Now, these are all fun metrics in and of itself, but how does this compare to what we are used to seeing from e.l.f.? Because remember that valuation, you either get it through growth or stability. Now, stability or a completely stable business model is very difficult for a retail product, so you'd have to get it for growth. If we look at it historically, we can see that the revenues for e.l.f., what they have just been growing exponentially. If we look at the past 10 years, it's a 23.5% CAGR, past 5 years, 37%, the past 2 years, almost a 75% CAGR, and the past year is 71%. We saw this in the slide before at the 21 consecutive quarters of growth. These numbers are incredibly, incredibly impressive. e.l.f. Beauty has such incredible growth on their revenues metrics. It's unheard of. But how do they convert those revenues into, well, income, for example? And here's where we see a bit of a different thing. And we see that their net income peaked in Q2 2023, but they have to compare to that number in the coming quarter. So that might be an issue. So what happened after 2023 is that they did some acquisition, but overall it has been trending down over the past few quarters. So I'm curious to see how they are going to pick that up in this quarter, because revenues are fun. Net income at some point starts to count as well. Now, EPS then, of course, no difference here, and not really surprising. That's also been trending down for the past 4 quarters. And well, in the prior 3 quarters, basically, you still had consecutive year-over-year growth. Now, this quarter, that might look a bit different. So then when we look at the EPS guidance, then we see that they are expecting to increase their EPS from $3.18 for fiscal 2024 to $3.20 to $3.25. Now, when these numbers came out, the stock reaction was quite funny in my opinion. We saw the stock, well, first of all, massive drop, because this is the price action after the release. And then it started trending up immediately. And eventually it was up 18% for the day after the earnings release. But when we take it trough to peak, it's up almost 40% in a day. I thought the reaction to the earnings report was quite overdone. However, there are some reasons for it. Now, let me first tell you about the expectations for the coming quarter. Now, analysts are expecting 83 cents of EPS. That will mean it's still down from the year ago. However, they are also expecting $303 million in revenue. And well, this would be up once again, such a massively up quarter. In Q1 23, they reported $216 million in revenue. So, top of mind calculation, that will be up another 35 to 40%. Now, what we also see in this slide is that e.l.f. Beauty just continually beats the expectations by a wide margin. e.l.f. Beauty is a company that likes to first guide low. They want to have their first guidance to be, well, beaten easily, and then just up the guidance. So they want to triple beat every quarter. They want to beat EPS, they want to beat revenues, and they want to beat on guidance because they are lifting their guidance each quarter. This is what they have been doing. And if we look at the share price, we can see that they have been doing this very, very effective. This is a strategy that works really well for them. And that's also why we see the stock's reaction after the last earnings report. We saw the stock first fall, dropping because the guide was for, well, basically minimal growth, especially compared historically. But then people started to realize this is what they do. They explained it in the earnings call, and then we saw the stock trend up higher and higher and higher, to the point where if you bought at the bottom after the earnings release and you sold it at the top, you would have gained 40% on your investment in one day. Now, that's of course an extreme example, but once again, this is the way that e.l.f. Beauty does it with their guidance. So what would need to happen for e.l.f. Beauty to sustain that valuation and to get their share price up once again, have one of those another amazing reactions to their earnings release? Well, they need to beat their raise. That's quite simple. That's where they need to start. And the revenues, well, in my opinion, they have to be up more than 50% from last year. Because we saw it in the last 5 quarters, it was up over 70%. If they now all of a sudden start dropping that back to in the 40s, then people are gonna wonder, why am I paying such a valuation with all the investments this company is doing? And they are not even growing that fast. Of course, over 40% growth is still incredibly fast, but I think that seeing the track record of e.l.f. Beauty, they will need to have a 50% plus revenue increase from last year. Now, let me know if you agree with me in the comments below. Please subscribe to my channel if you've enjoyed this video. Don't forget to give it a thumbs up, and I hope to see you in my next video.